If I look at this as an indicator, the rule is simply in and out and reverse. In and out and reverse, okay? That's the rule. That's how you're supposed to use it. That's how we will use it. So here's my zero profit and loss line right here, right? So I'm going to add profits to that line and take profits off. We're not going to rescale it, so it's not going to make any difference. So there's my profit and loss line. You'll see what happens when we start this, okay? My first trade at 8 o'clock, I'll take this one. I won't take the losing trade to start with, guys. We'll be fair on it, and we'll take the first trade here to give us a starting point here. So there's my entry price, and there's my exit price there. So it's actually a zero price, right? So we're not going to bother with that one. So that was a scratch. Let's take the second trade here. So that was the entry there. And that was where we exited there. So that's a profit. So we'll add that to our line. You see what we're doing? We're now adding that profit to the line. We're not going to rescale it. So then there was a buy trade here. Now, obviously, that buy trade gets stopped out here. So that's obviously a loss, right? So what we're going to do is we're now going to take that off the profit line there. So we're going to start at the profit and we're going to go down the way. So that's exactly what we're doing, right? That sell trade there reverses here. So that's a profit. So we'll add that back onto this line, right? So you can see what we're doing. We're adding it back onto the line. Because obviously this is where we're currently losing. This is where we're currently making profits, right? So we're adding that back onto the line. So what happened to this buy trade here? Well, the buy trade went to that price there, right? So we're going to take that off the line. And then we had a sell trade here that went into a buy trade here, which was a loss as well. So we're going to take that off the line. So we've almost fallen off the bottom of the page here. So what we're going to go, obviously, fortunately, we get a beautiful winner here. And when we add that winner to the charts, we've obviously done very, very good. However, when we add that winner to the losers we've had, you can see that we're still a distance away from a break-even trade at this stage. It's still quite a sizable loss, right? So the next sell trade here was another losing trade there, so we'll take that one off. And again, we'll just take it from that last point, so it kind of takes it backwards a little bit. I'm going to just turn it around a little bit so we can see it there. And then, of course, you know, the next trade, of course, is a good solid winner from there to there. So we'll add that back onto that price there. So that's the winner there. And then we'll take the next trade, which is also a very nice winner at the moment. Very nice winner indeed. So there's the winner just now. And we're going to add that back onto the price just now as well. So we add that back onto the price. So we're, with all those beautiful swings, our current profit and loss is zero. Less commissions, right? We've given the same prices you would have got based on the candle close, because you've got to wait for the candle close. And the profit and loss on that entire phase from 8 o'clock is zero. Now, zero is better than a lot of things. Zero is good compared to an awful lot of other things. But the problem you've got with it is you're still getting in very late, and you're hoping for a very much of a turtles type trade. You know, so when you're looking at a turtles type trade, you can see that if it breaks, you're going to make a lot of money. Absolutely, 100% you're going to make a lot of money if it breaks. So it is a very much a turtles type experience. You're going to get periods where you'll do very well indeed, and then you're going to get periods where you'll lose everything you just made in the prior session. You can see the drawdown we had during that phase there was quite substantial. I mean, considering our current maximum upside at the moment is that size there, right? So that's our current maximum upside. Right, so that was our current maximum upside there. Was to that price there, wasn't it? So that was our current maximum upside, which is, you know, okay, so that is what it is. Our current maximum downside was obviously that entire phase there, right? That's our current maximum downside, was that. So when you compare the upside to the downside at the moment, there's a problem, isn't there? We seem to have a bit of a discrepancy in terms of the downside risk versus the upside potential on this at the moment. But when it breaks, by all means, it makes a lot of money. This is the challenge that was faced by the turtles, wasn't it? When they entered the market in terms of a trending system idea, the market was very trending. They made a lot of money. Everybody hailed them as the next greatest trading sensation. And they were, because they happened to hit the right trade strategy at the right time. And what was their biggest single problem? Their biggest single problem was their inability to adapt to the current prevailing market conditions. The inability to adapt to the current prevailing market conditions is the biggest reason why everybody loses money. Market makers lose money, floor traders lose money, retail traders lose money. Everybody loses money if they can't adapt to the current market conditions, if they can't recognize that something else is driving their marketplace. Everybody will lose money. Regardless of how professional you are, you'll still lose money. So the key to success as a professional trader is being able to recognize a change in circumstance. So this is what we're talking about when we're talking about things like VAR. The ability to recognize that VAR is extending. Looking at the idea that if VAR is extending, what can we do about VAR extending? What are we going to recognize about that as a possible problem or as a possible proper opportunity? Well, if VAR is extending, we don't want to be playing for the fade reversal. If VAR is very high, we don't want to be trying to fade. Great example was that top edge equity reversal. VAR had came off of a high quite nicely, quite considerably, and we were able to get a little short sell into place. Considerably a good little short sell into place. I'll show you this in a second. I'll bring it across. So this is what VAR looks like here, right? So we obviously talked about VAR in terms of the NASDAQ earlier. So this is what VAR looks like. So you can see we got a signal here, and the VAR was dropping nicely, wasn't it? So you're starting to recognize the possibility that this could be a top edge and a reversal, whereas this cannot be a reversal because VAR is very, very punchy. On the retest, it gives us an easy opportunity to get short. When we tap these areas here and we can see these MXD1s and MXD3s, the problem is that that happens with VAR at the very, very top edge. Am I going to use that as a buy trade? No. Because I think the market is extending. I think that the Fourier transform is extending. And I would expect, therefore, this to be a profit take, but not a buy trade. If I want to buy it, I am going to move the time cycle effectively. And I'm going to move the time cycle to try and bring the price down through that extra volatility phase. And it's a really easy read, isn't it? When you think about it, it's a really, really easy read. So, for example, when we saw these two trades here, could we sell this one? Yes, we could, right? When we saw this MXD3, could we buy this one? Yes, we could, because we can see that VAR is rocking to the downside. Could I sell these ones? No. Absolutely not. Absolutely not. Could I sell this one? Possibly. Could I sell the retest? Absolutely. Could I buy this one? Absolutely not. So again, we recognize that this is a profit take opportunity, but it is not a sell reversal. We recognize that this is a sell reversal, and we recognize that this is a buy reversal. So in other words, we can do so much better by recognizing the concept that we always trade with volatility. Every trade we take has a volatility component. If we get that volatility component wrong, we're going to lose sight of the reality of what is actually happening in the marketplace. Indicators cannot give us that. A combination of indicators can. A combination of pieces of evidence can give us this very clearly identified extension. And therefore, when we see that reasonably and it is reasonably identified. I think there's nobody in the world that would look at that and say, yes, I'm going to buy that. You can now recognize just how good that sell-off was. Now, outside of the fact that we already knew about this level because of the because of the prior swing high, for example, you might have recognized this already. So if you look at, for example, the NASDAQ here was what we were talking about this morning. We had two key levels. We had the big volume level down here, and we had the prior swing high up here. And these were the two levels that we were trading off of today. So there was the buy trade there. There was the sell trade there. I mean, it doesn't get much easier than that, does it? It's kind of obvious and kind of simple. So we can see some crazy good opportunities to make some deals up here. So when it does decline, when we start seeing that VAR coming off a little bit, we know what to do. And as Stefan rightly mentioned, we were also at the VWAP top line. You can see we were also at the VWAP top line on the NASDAQ. What else were we, though? We were also cycling the buyers at lower prices. Do you see that? Take a look. Are we cycling the buyers at lower prices? Yes or no? Yes, we are. There they are. Is the book supporting the cycle at lower prices? Yes, it is. Is this a no-brainer sell? Yes, it is. 725s trading 685s. $800 profit per contract. It's a spectacular sell. It's not a good sell. It's bloody marvelous. So when we see the obvious stuff, we just make sure we remind ourselves that the market sometimes runs in a channel and sometimes extends. When it extends, Super Trend's going to do brilliant. When it runs in a channel, Super Trend's going to lose you all your money. What we've got to do is have the ability to interact with those types of pieces of information and say, but I know that this is what it's starting to show me. I know that this is going to be a good cyclical opportunity to sell into. And you can take advantage through many different areas. You can add as many layers to this analysis as you need to add. The more layers, the less chance you've got of making a mistake. The more layers, the longer it's going to take to make a decision. You might find that you're getting competing decisions. This says buy and that says sell, and you can't make up your mind. Well, just leave it alone. And that's called benchmarking. It depends how many layers of information you're going to use to benchmark. So when we see that this is definitely a top line sell based on what we see here, well, get the sell on. Everything else lines up for it. Now the dealer's key level lines up. We know that the dealer's key level lines up here. You might be saying, I don't understand what you mean about the dealer's key level. Well, you'll probably be aware that we have the dealer's keys every day. And you'll also be aware that one of our major dealer's keys levels today was 19,735. 19,735. We traded a high price of 19,730. So one of our dealer key levels, 19,735, was very, very important. It doesn't have any new dealer key level until 655s. So we're already aware that 735 area, which was up here, was a key dealer's level. We've already recognized, as Stefan mentioned, it's 2 standard deviations. We've already recognized, as I mentioned, that this was the previous swing high up here. We've already mentioned, as we can see here, that the buyers are being absorbed by dealers. We can already see that the dealers are making no hiding of the fact that they're selling here, because the book is stacking on the offer as well. It's crystal clear. And with the VAR starting to drop out, it's now crystal clear that we don't have any real challenges to this analysis, and we can play it, right? We can actually get involved and we can play it. If we look at max VAR, which obviously is our own version of this process, look at how low it was for that sell trade, guys. You see how low it was for that sell trade? It was actually day low for VAR. Day low for VAR. You might say, why is that the case? Because it looks quite volatile up there. Because it sees that higher time frame analysis. You know, during this period, it could be in a shorter time frame, it could be quite punchy, right? But obviously, when we start moving out into that bigger time frame analysis out here, we can recognize that that is a swing high that we're retesting, and therefore max VAR finds that information for you and puts it into this context here where we start seeing this incredibly low VAR that we can trade into very nicely. And as we get incredibly low VAR, we can recognize that the VAR kicks off on the sell side, which means that the VAR then kicks off on the sell side, which means the VAR kicks off on the sell side. Do you see that? Because if the VAR ever kicks off on the buy side, then of course that's when the things change. So when the VAR drops on the buy side, we're sellers. When the VAR rises on the sell side, we're sellers. Does everybody understand that about volatility, yeah? So when we're trading volatility, what's happening just now? What's happening right now on the right-hand edge as we watch this? VAR's dropping on the sell, right? So what does that mean? That means that the bottom edge is starting to show up here. So as the bottom edge is starting to show up here, we want to book our monies. Comprende? Comprende? It's a great trade, isn't it? It's a beautiful bit of business. We're looking at a trade that's nearly $1,000 wide, simply by trading volatility. And if we can trade volatility, we can trade pretty much the truth of any market. We talked about this morning, about the concept of the high betas with equities and having a different storyline because of pound yen, and then not realizing that there's a fundamental reason for this. And we'll obviously go into a lot more detail about this when we get into Classroom this afternoon. But we're going to cover a couple of these pointers before today's New York session. So we'll get into that after today's news. So let's give us 60 seconds and then we'll get news out the way, the data out the way that we're talking about this morning, and then we'll get into a little conversation about some of the triggers we saw from yesterday.